Welcome back. Continuing our focus on corporate conversations, we are now being joined by the management of CE Infosystems. It was a muted second quarter. The revenues were up, but the operating performance was weak. Rakesh Verma, the co-founder and CMD of MapmyIndia, now joins in. Mr. Verma, good morning. Thank you for joining in. Now, with the kind of growth that you have had in the first half of the year in terms of top line, what are you guiding for the full year? And what is going to lead that growth? Will it be the high margin business that will contribute more towards the growth in the second half?
To answer, first, let me thank you for inviting me to your channel. To answer your question very direct, the answer is yes. The second half we have been discussing, and we are very bullish about the Q4. And so the projections that we have given for the year, both in terms of the revenue growth and for the EBITDA or profitability, is going to be as planned, and that's how it looks like at this point of time.
Mr. Verma, morning. This is Reema here. Can you help us with the projections on revenues and margins for the full year and second half?
Well, as far as the margin is concerned, we have always maintained that it will be anywhere from 35 to 40%.
Okay.
And if you see the half year H1 also, it is more than 35. So it definitely will be closer to 40 than closer to 35. As far as the revenue growth is concerned, we are expecting for the whole year a revenue growth of anywhere between 20 to 25%. As of H1, it has been 14.7%.
Okay. But sir, your margins in Q2 were particularly depressed, I think closer to 24-25%. And there was this one-off technical services outsourcing expense for a specific government project. Does that reverse? Can it repeat? I mean, how do you get to EBITDA margins of closer to 40%? And what is the share of government revenue now?
As we explained it in the earnings call just a half an hour back or so, see, we are investing heavily into 3-4 areas. For the long term, when I say long term, I don't mean 10 years, I mean 1, 2, 3 years, investing heavily in 4 areas. One of them is the areas where related to the government business, which means related to road safety, related to defense, and related to railways. Now, when we are investing there, because we see very large opportunities that's coming, and particularly using our platform and product, not a classic services business. The other area we have already invested is from our international joint venture. And the third area we are investing is to make our product to the next level, the consumer-facing Mappls app. Now, particularly in Q2 and Q3, we get the opportunity to focus on this new businesses that we need to create, whether in terms of technology product or the opening up new business opportunities. And the operating revenue of Q1 and Q4 look like more from making sure that the revenues and the projects are delivered.
So, Mr. Verma, just to give you a number, how much of your total business now comes from the government? That's one. And two, there was a certain increase in expenditures like technical service outsourcing during the quarter. Are these expenses one-off? And do you believe that, or do you believe that these will increase going forward?
Okay. First is this was one-off. We have mentioned it in our presentation. Whether it will increase, not related to this particular initiative related to the road safety. It will come down. But we have other opportunities in railways and defense where something else may happen. But while we do this, we ensure that our overall EBITDA margin remains intact between 35 to 40%. Your question about
Government share.
how much is the government's revenue share? Now, government's revenue share, if I say as of today, H1, it will be somewhere in the order of 20%.
Okay. Mr. Verma, short conversation, but we're out of time. Lots of earnings to track today. Thank you very much for joining in. That's MapmyIndia for you, talking about a 20 to 25% revenue growth for this year, FY26, with EBITDA margins at 35 to 40%. Stock, though, is down 5%, 20% lower from its 52-week high. But let's get to the